Alrighty guys, so in this video I wanted to go through high probability versus low probability setups, and we'll use examples from today and we'll back test and we'll go from the previous week or something of that nature. So let's get straight into it. So what for me makes a high probability setup? Let's just draw like an illustration here so you guys can see what I'm talking about. This is one high probability setup, right? And you might know what this is already. It's the power of 3. And we'll go into this in a bit more detail. Another high probability setup is this, tapping into a high time frame imbalance. It could be on the 15-minute, and then reacting from there to move lower during a key time frame. The same applies for the downside. So that's an upside example. This is a downside example. You can also flip those and get examples in that manner too. So the market's obviously alive at the moment, but have a look at what happens here, right? This satisfies this model, right? Have a look. We're on the 15-minute time frame, right? What happens here with price? We've got a 15-minute imbalance. We've got liquidity that rests just below that imbalance, which is what I like to see. We sweep that. Somewhere in here, there's a high probability reversal. Why? Because we've satisfied two things that the market does, which is take liquidity and fill imbalances, right? So we got that. So if I go to the 1-minute time frame now, have a bit of a look at how this looks like. And I've got my analysis here, so you guys will be able to see too. So have a bit of a look. That's your 15-minute imbalance. On the 15-minute, we close obviously within. On the 1-minute, we've got 1, 2, 3 drives pattern. 3 drives pattern. Now, I was talking about this with my Discord, right? So I was tape reading and they were trading this live as well. 1, 2, 3 drives pattern I talked about and anticipated a sell-off from this zone. Why? Because again, it's an A+ setup. I was mentioning to my Discord too that what I would have preferred to see would have been something like this. I would have preferred to see this low untouched and then still have something like this, because that way that would be lower resistance liquidity. But it still played out, so we still had that 3 drives pattern. A lot of people are asking me, do I go live in the Discord 1 to 2 times a week? Yes. The other days in the week, I post my analysis in the chat, but I'm always there to ask questions too, so we can talk live in the markets for London session. That's completely fine. So I've been liking these live streams, but they're really nice to get people's input and for people to ask questions and to see trades that people take too. So that there, in my opinion, is a high probability reversal. We've gone from the higher time frame analysis down to the lower time frame analysis. That there becomes your entry, right? Would I prefer to see a market structure shift? Yes, but there's still an entry there, right? So that's one thing, right? Now go back to the 15-minute. Here's another high probability reversal. And we'll do like another illustration. There's a few models, right? We got this, we do this, and we do that. Power of 3, you could see it as, but what I want to talk about is time-based liquidity. Time-based liquidity is generated in a key session. So let's say you're trading the London session. These are Asian session lows, for example. If you sweep that and have a reaction off that, that's also high probability. What makes it high probability is if there's a fair value gap resting below here, like a bullish fair value gap. Today, we didn't get this example, but we got the first one. Let me just show you what it looks like. I myself took a long setup down here. Nice short scalp. A couple people from the Discord also took this setup here and then went really, really nicely to that buy side objective. So have a look here. You've got these relative equal lows, right? You sweep this liquidity. Those are also Asian liquidity lows. Why? Because Asian session for me is from 7 till 12. These are generated in that time period. So you sweep that and have a look at what happens here, right? There's a couple entry models, and we'll just go through them quickly because I want to go to the separate days. That there is an inversion fair value gap. This here is a bullish gap, right? So if you like my teaching style, guys, I've got obviously other avenues too. So I've got the TikTok, I've also got a Twitter and also a Telegram. The Discord is there too, and there's different modes for you guys to use, both free and paid, but that's completely up to you. So we've got a bullish gap there. We've got another one coming up here. These are all potential entry models that you can use to go long. There's also a breaker block. So these are all things that I mentioned in that call to the Discord, right? So a lot of people like to see what I think live in the markets. I'll do that there once in a while too. So you can see we're pushing higher. We use this order block to push higher. And there's all this low resistance, liquidity. Tongue twister. Low resistance liquidity resting at all these highs. And we also got this here, right? So that kind of shows you two high probability reversals, right? Just using the 15-minute and using either liquidity and imbalance or you've got obviously liquidity that's time-based. That's one example. Let's go to the previous day. Let's go to the previous day. So, previous day. High probability reversal. Again, mark out your imbalances. Mark them out and do exactly the same thing. Is there liquidity below the imbalance? Yes. Do we take that out? Yes. Do we tap into a 15-minute imbalance? Yes, we do, right? So here becomes the high probability reversal. Now we've got to find an entry model. That's the whole important thing, right? So let's go back here. Maybe back here. Why is it high probability? Because it fits that model that I talked about, guys. And the model, again, is this. You generate liquidity, you sweep that liquidity, tap into an imbalance on the 15-minute, and then you have a reaction during a key time frame, right? So it's a typical RAID, market structure shift, and return. But this here is obviously the entry model. Now, where can you enter from, right? Where are the entry models? Let's have a look. Let's play this price out, and let's talk about it, right? This is a breaker block, right? This is a breaker block. There is a small sell-side imbalance right here, and volume imbalance right there that you can enter from. Breaker block, imbalance, that's your entry criteria. Or you could enter from this failure swing, inversion, fair value gap here. So there's many entry models that you can use. But if you're looking for fair value gaps, that's kind of what you're seeing. And eventually we just sell off. So we accumulate here, which is good. And then we sell off. We take out that liquidity. So you have uptrends, you have downtrends. You can take advantage of both. But for me, those are the highest probability reversals when you've got like a high time frame PD array supporting, or you've got time-based liquidity. Those are the highest probability ones. So there's another example for you guys. Here is another example for you guys too. Again, same model, but in reverse. Now we're doing the same thing, but we're doing it in reverse. So we're generating liquidity, we sweep liquidity, tap into an imbalance, and then we reverse during a key time frame, right? Or within your parameters. So this occurs in both ways, guys. We've got this occurring here. Have a look when we move up. And we've also got the opposite when we do this. Look at this. We move up like this at price. And that is your high probability reversal to take it to sell side. So there's two ways to apply this. Let's talk about the first one. Let's go back here. This is probably easier because you're in the end of silver bullet in a key time frame. Right, have a bit of a look. You get a 15-minute imbalance here, right? You come into that. You might be like, well, we don't RAID liquidity. Technically, we don't, right? So if you wanted to use exactly this model, maybe that doesn't fit, your criteria, but we do RAID it here. That's the thing. And look at where the body's closed within. The body's closed within that 15-minute imbalance. So I apply this model, guys, day in, day out. This is like my A+ setup, right? You can see how that looks. And then what we should do is we should go back right here to see if there's any entry opportunities that we can take advantage of, because that's obviously the most important part. Now with this, it's simply a turtle soup. We RAID liquidity, these two relative equal highs, look at that. Equal highs, we RAID that. We're doing a macro from 350 to 410, right? Which I'll map out here too. Now I know I'm going quickly through this, but I want to show you examples of how these setups work, guys. And then obviously we've got an inversion fair value gap created here too. So multiple opportunities. Notice that. That's your first high probability setup. Once that happens, once that occurs, go back to the 15-minute time frame. Do exactly the same thing. Do this every single day. Look for liquidity that rests just below or above a 15-minute imbalance. Wait for that liquidity to be taken out. Once that liquidity is taken out, then look for a reversal pattern that suits your entry model and entry criteria. So at this point, as soon as we take that out, we'd be looking for some kind of reversal. Why? Because the market's repriced to both things that it likes to do. And let's see what price does from here. Have a look. And have a look at when it really starts to move, by the way. Have a look. 550, look at this. This is the macro. 550 to 610. Failure swing, market structure shift, return to an imbalance and order block. Go long from here, target the buy side liquidity. This is all low resistance on the upside there. And you can see what happens to price. We do end up moving up. Even though there's those big bearish gaps, because look, we've just rated liquidity, we've repriced. And then on a larger time frame, guys, look at this. on a larger time frame, this now becomes accumulation, manipulation, and that becomes the distribution. So my advice, right, when you're looking at this, and you can see how we trade there, right, as we approach the AM session, look for those setups. Look for those setups. That is my advice. Here, this is an example of where I wouldn't really like this as an A+ setup. This is not, in my opinion, the highest probability. You might be like, well, why, Ruben? Why? Well, here's why. You notice the size of those fair value gaps? You've got a fair value gap here, yes. I appreciate that. But on the 15-minute time frame, because that's mainly what I use, we disrespect that. We disrespect that because we tap into this order block, but I prefer if we just tap into the imbalance after rating liquidity. So this, for me, even though we do react off that, I don't like that as much, just based on my playbook, right? It does occur during silver bullet, and let's just go there to see what happens, just so you can see. But again, I prefer a bigger fair value gap, and for the bodies to really respect that on the 15-minute time frame. So have a look here. This is what price con does. And eventually we do reverse. When do we reverse? Again, we reverse during the macro from 350 to 410, right? So again, depends on your entry criteria, guys. But for me, I don't really like that as much. In terms of a short position from here, like a short, let's have a look. No, not really. I don't really like that. You know what I mean? In terms of like an A++, there still are reasons for that, right? But if you're looking for a really simple model, that doesn't fit the model. Like here, yes, you return to an imbalance. What would have made this an A++ setup is if you generated liquidity up here, then you swept it, and then you tapped in. That would be fitting into this model here that we talked about, right? So different examples, right? But this is something nice and mechanical that you guys can use. So where's the next day? Here we are. Is this fitting the model? No, it's not. Why isn't it? Because yes, you rated liquidity here, right? But look at the session, 233. We just absolutely pumped the upside. And there's nothing here. We just move in one direction. And then silver bullet happens. We just continue that trend. So there's no high probability reversal in my opinion based on this. Yes, we do move up, but look at when the reversal happens. It occurs way before the London Open session. So it's something that, you know, you could enter and you could do a trend continuation. But if you're looking for a reversal, then probably not. Here's another example, right? You can use this in a trend continuation model, right? So here, you know, you've come down, look at this. You don't sweep this low, which is suspicious. You come up, you raid liquidity, you tap into this 15-minute imbalance. There's another example here. This is like a trend continuation model. You can see the bodies respect that, and then you sell off. So that there, we'll see if there's an entry there for you guys. But this is just to illustrate that, like, high probability setups form from what I'm talking about. That's just my opinion, but that's what I look for. So when I'm doing my analysis, that's exactly what I look for. And then maybe here is like your inversion fair value gap. So let's play that out. And you can see then price goes to take out all this liquidity here. Right? So again, the highest probability are the ones that I've been showing you previously. These are still high probability. And it's not to say you can't find good trades, but if you're looking for a mechanical model, this is what I'd say, right? Mark out 15-minute imbalances. Wait for macros. And then look for a sweep of liquidity. And tap into a 15-minute imbalance. That is like the basis of this strategy, guys. That's the basis of this strategy. So that's kind of what we're working with. Let's have a look. Here, what do we have? Nothing that fits that criteria. Again, I'm not saying that you can't enter a long or a short and make money off it, but for me, nothing enters that criteria. It doesn't mean I won't enter a trade, no, but it might mean I risk a little bit less. That's all it means, right? Let's keep going back. Here, for example, look at this. Nothing. We just push up. We're just pushing up to all-time highs. It's not really doing much there for us. Let's have a look here. 3 o'clock, where are we? So 245, we come up, we raid liquidity, tap into an imbalance, a reversal. We come down, we raid liquidity, we satisfy this imbalance here, we respect that. That is also another high probability reversal. So you can see, right? These things happen. That's 445. This is a bit earlier in the day. But there's some really nice clean examples that you'll notice. Like this, for example, is really, really clean. This is like the highest probability. Notice how you got liquidity right here, and we'll probably end on this, guys. You got liquidity right here, right, that swing high, right in that imbalance, right there. That is the highest probability, because then you can reverse straight away. And what do you take away? You take away all this liquidity. So that's accumulation, manipulation, that's your distribution. That is the highest probability trade right there, right? The power of 3, you've got multiple things based on these illustrations. The power of 3, manipulation, taking out liquidity, tapping into an imbalance, a reversal within the London open session from 2 to 5 o'clock. That also probably sits within a macro, and you can see how we sell off. So that hopefully explains to you guys what a high probability setup is. Just to recap that, using this example, for a high probability setup, you've got accumulation here. You come up, right? You sweep liquidity. You sweep some point of liquidity, and you tap into a 15-minute imbalance. Can it be a 30-minute imbalance? Yes. Can it be a 20-minute imbalance? Yes. But I just found better success with a 15-minute imbalance. And then we work to take out all that sell side. Low resistance, that's why we trade so aggressively towards that, because there's accumulation. So hopefully that makes sense, guys. If you got any questions, feel free to leave them in the comments below. And again, guys, follow me on TikTok. Obviously, I've got my Telegram and other sources there too. And until next time, I'll talk to you guys then. Hopefully you found this video insightful.